Hi traders, and welcome back to yet another new video from Trippa Trading. In today's video, I explain a scalping strategy that you can execute on the 1-minute time frame. I take you through all the steps to successfully open buy and sell positions. Then I test the strategy 100 times with a $1,000 account value so you can see how much the strategy actually pays off. Let's get started quickly. Today, I am trading this strategy on the price of Bitcoin, but you can also perform this strategy on other cryptocurrencies or Forex or on the stock market. If you're wondering which broker is best to trade on, you can check out the description of this video. Here are links to the brokers I personally use. We use two indicators for this strategy. This is twice the smoothed moving average. In the indicator section on TradingView, look for smoothed moving average, and so now click it twice. We will give the first smoothed moving average a length of 20. The second smoothed moving average we give a length of 50 and give it a different color so you don't get confused with the other indicator. What this indicator does is actually show the average of a certain period by means of a simple line. The indicator actually looks like the traditional moving average, but this one is smooth, as the name implies, so it moves a little more stable with the price. By charting the average, we can easily see whether a price is favorable to buy or whether it is favorable to sell. Let's start with our entry rules. We start with a buy position. The entry rules for this strategy are quite simple. Initially, we want to see the two indicators move above each other. This is because it confirms that we are moving in a rising market, and so we only want to open buy positions. Next, we want to see a pullback below the 20 smoothed moving average. The area between the 20 SMA and 50 SMA is the area in which it is favorable to buy. However, we are still waiting for one confirmation. We are waiting for the price to rise over the 20 SMA again. This shows that there is actual buying going on, and so we want to open a buying position. I open my buy position and set my stop loss below the 50 smooth moving average and set my target 2 times higher. As you can see, this position closed profitably in just a few minutes. Let's look at another example. Here again, we see the same thing happening. We know that price is moving in a rising market as the two smoothed moving averages are moving above each other. Next, we see a pullback and then another rise over the 20 SMA. We again open a buy position and set the stop loss below the 50 SMA. Our target then doubled again, and as you can see, this position also closed profitable. Now that you know how this strategy works in a rising market, I'll explain how you can also trade when the market is falling. Before you can open a sell position, we now want to see the two indicator lines moving below each other. So the blue line should now be above the purple line. In this case, this confirms that we are moving in a falling market and we are only opening sell positions. We are now waiting for a pullback upwards. Once again, the area between the 20 and 50 SMA is the one that draws our attention. Indeed, as soon as the price drops below the 20 SMA again, we open our selling position and set the stop loss above the 50 SMA and our target twice as low. As you can see, this was another nice profitable selling position. Here we see another example of a selling position. The price makes a rise between the 20 and 50 SMA and then it drops back below the 20 SMA. This is when we open our selling position. This position also closed in profit within minutes. So we can speak of a real scalp strategy. Before you can trade with this strategy, or before you can trade at all in the financial market, it's always important that you trade on the right reliable platforms. Often, I also get the question on which platforms I trade then. Well, for my crypto buy and sell positions, I always trade on the exchange Bybit. As you can see, I have a fair amount of capital on here, with which I open my buy and sell positions daily. I do this with levers, which makes it worth even more. Of course, I won't do that if I wouldn't trust the platform. This platform has a lot of features for the serious day trader, like a 4-price layout or the copy trading function where you can let people copy you and you get 10% of their profits. I recommend you to take a look at the platform yourself to find out more. For my Forex buy and sell positions, I always trade through the broker Admiral Markets. This broker is also reliable and cheap and has about the same features as Bybit, only focused on Forex and stock trading. Both platforms you can use also via the mobile app. Again, you can take a look first or try out a demo account. Both links are in the description. Well, now that you know which platforms I trade on, we can quickly get back to the video. If you execute this strategy, you'll often see that the price not only reverses between the 20 and 50 SMA level, but also often drops below the 50 SMA first. If we look at the official rules of the strategy, we are not allowed to open a position if the price subsequently rises over the 20 SMA. But in the following way, you may still open a position. In this case, you wait for a trend line breakout. If we see a breakout over the trend line, it means that buyers are still getting in and the price might still rise. So we use a trend line as extra confirmation. If you open a buy position at this moment, you again place the stop loss below the 50 SMA, and you set the target twice as high. While it seemed that the price was starting to fall, you have now been able to open a profitable buy position. Here, we see another example of that only in a falling market. The price has already risen over the 50 SMA, and so we should not open a selling position since the market is likely to rise further. But still, there is a chance that the price will still fall. We just wait until the price breaks out below the trend line. As soon as that happens, we open a sales position that closes in profit. This is a more professional way of trading, but it will ensure that you can open a profitable position much more often. You now know how the strategy works, so it's time for the backtest session because you obviously want to know how profitable this strategy is. So for this backtest session, I have scrolled back in time so that I can open at least 100 buy and sell positions. So I opened both buy and sell positions. As an example, I'm using a $1,000 account value so you can see how much you can possibly win or lose with such an amount. As you know, we use a risk-reward ratio of 2 for this strategy, and after each position opened, I update my $1,000 account value so that it moves live with my backtest session. Let's get started. I just finished the backtest session, and as you can see, this strategy is hugely profitable. I opened 100 positions in a period of just 14 days, and of the 100 positions, as many as 72 closed in profit, which means we have a 72% win rate. We achieved 214% profit on these profitable positions altogether. Alright, so in this video, I taught you an excellent scalping strategy that you can start using full time and start earning your income with. I want to thank you for watching. If you found it an informative video, don't forget to like and subscribe. If you have any questions about this strategy, you can always ask below this video.